Hello and welcome. I'm Michael Rowland, and on behalf of BDO, thank you for joining our Federal Budget 2026 conversation. I'd like to begin by acknowledging the traditional owners of the land on which we present from today, which here in Sydney is the Gadigal people of the Eora Nation, and pay our respects to elders past and present. We extend that respect to Aboriginal and Torres Strait Islander peoples joining us in our online audience. Well, Jim Chalmers handed down his fifth budget on Tuesday. He described it as the biggest, most important budget in many, many years, and also the most comprehensive tax reform package in a quarter of a century. Well, the jury, I have to say, is divided on that, and we'll get to that undoubtedly as part of our panel chat. Now, today we'll cut through the headlines and focus on what the budget means in practical terms, what it signals for the economy, for business decisions, and for households right across Australia. The tax and advisory experts at BDO have worked tirelessly through the budget papers, and today's discussion is designed to bring you clear and considered insights. Now, if you have any questions, please submit them through the Q&A function on your screens. We've also received a number of pre-submitted questions, and we'll do our very best to address the key themes throughout our discussion. Now, joining me today are four BDO experts who bring deep expertise across economics, tax, and industry. First, Shani Mitchell. Shani is the national leader for BDO's tax division in Australia. She leads a team of more than 360 people across Australia, and today she'll address the budget's key taxation changes and what they mean for companies and for you. We're also joined by Anders Magnuson, BDO's chief economist. Anders will set the scene for us from a macroeconomic perspective and assess what this budget could mean for growth, productivity, and very importantly, living standards. Next, Alicia Rothwell is a partner in BDO's audit and assurance team. Ellie will bring an audit perspective to our conversation today, what the budget means for reporting, risk, and business confidence, with a particular focus on real estate, property, and construction. And last and certainly not least, welcome James Trainer. James is a BDO partner in tax who specialises in global, expatriate, and employment taxes. He'll unpack what employers and employees will need to know after this budget, from remuneration and compliance to the practical implications for your workforce. Thank you again all for being with us on a very important day in Budget Week. Firstly, Shani, to kick off the discussion, as with any budget, there are no shortage of winners and losers. What are your perspectives on the winners and losers from Jim Chalmers' fifth budget?
That's a great question, Michael. I would say that it's a bit of a double-edged sword, so I'll go through why I think that is. So some of the winners are, we've got small business, we'll see instant asset write-off is now permanent. However, it would have been nice to have seen that increase from $20,000 to say $50,000. So by way of example, take Jane, who's a tradie. She's looking to buy a ute. Back in 2016 when this was introduced, it was a $20,000 write-off. And a secondhand ute would cost you $15,000 to $20,000, so she'd get the write-off. Fast forward to today, and $20,000 is not going to get you a secondhand ute. It will be $35,000 to $40,000. So it would have been nice to see that amount increase. Also, though, on the upside, this is going to help those small businesses with their cash flow management, and really be able to plan their CapEx spend in the future. Um, we've also seen the loss refund introduced for startups. So this is a positive move to keep those innovative and tech-based companies in Australia. The only thing that I can see that might discourage slightly is the fact that it's capped at pay-as-you-go withholding and FBT. And my colleague James will probably talk a little bit on the interactions with the employment side that can lead to. Um, we've also had the return of the loss carryback. So you might have remembered this from COVID days. This was really helpful in uncertain times. So, and we're in those right now. Australian businesses are incurring increased costs on those everyday sustainable and commodity-based items that they're using. So fuel, fertilizer, etc. So this will help them to have a real-time incentive being introduced 1 July 2026, which is a great initiative. Then we go to the flip side, which is how have those people who are receiving these benefits actually structured their business? So we've seen the announcement of the removal of CGT and back to our indexation. And we've also seen the announcement of the minimum 30% tax on capital gains tax. So Ellie's going to talk a little later, likely around the housing side with her real estate expertise. But I think this is really going to see a push from those capital growth assets that people have historically invested in, and they'll be going for those yield type investments in the future with these changes to CGT. It was good to see that there was some consideration of grandfathering. And that because there was a lot of speculation in the market, and there's probably a lot of the generation who's used negative gearing and the CGT as their basis for retirement might have been in a slight panic mode. So the grandfathering was a welcome introduction. I would also probably point out that when I was reading the Treasurer's announcement after the budget, that it might not be that all CGT assets are captured. So there was comment around there for consultation on startups, etc., because recognizing that innovative industry that's in Australia. So there will be a consultation process, and we might see some leeway on what CGT assets fall within the realm of the rules. The other thing that is probably on everyone's mind is discretionary trusts. So a minimum 30% tax, effective tax for discretionary trust. This one is going to be a legislative, I would say, nightmare to introduce. So I can understand the 1 July 2028 date. This is aimed at getting those investment strategies which have been really based around tax. So your bucket companies, your income splitting, this is exactly what that's aimed at. Though the government has also said that they will be introducing a rollover relief to restructure your trusts into something more effective. Um, I think the key part with that is that it's a bigger play. You need to make sure that you don't rush into this sort of thing because there's other considerations. So you've got duty and commercial reasoning as well that needs to feed into this. Um, and so I do think that the tightening of these rules will be quite good. It's very unknown how the non-refundable offset is going to interact with franking credits as well. So we have the flow through that currently happens. Could we end up with an effective tax rate of 65% plus? You never know.
People are dropping their pussy cups or
We're at a soda. But yeah, it is quite unknown. So I think we need to wait and see how it's drafted and go from there.
let's go to you, Ellie. Shadi flagged the housing conversation, lots of it around the budget. Wearing your cap as somebody who keeps an eye on real estate and construction, what are the housing sector takeouts for you from the budget?
Yeah, that's a great question, Michael. I think the budget, the federal budget that's been released, it's been so great to see such a focus on housing, and I think we're all well aware of the situation that we're currently in with the housing crisis ongoing across the country. I think the federal budget, it's really trying to shape the way people invest, and that's who's investing and who will be buying the properties, and aiming to really uplift the amount of supply and access to all Australians across the country. So they're looking at 75,000 new homes, or people being able to access into the first homeowners scheme and buying over the next 10 years. I think from the perspective of how they're achieving that is quite interesting. We've got negative gearing changes, obviously, and capital gains tax being the key drivers that the government are using to drive the supply chain. And negative gearing, I think, is really interesting because, and Shani mentioned the grandfathering, that's really the stabilization of the market and making sure that there's not a big exit strategy or a big shake-up in the market in the housing in housing in Australia. And I suppose what it does is allows people to previously recoup their losses against all of their income generating assets and wages, etc. So the change going forward with negative gearing is really addressing, that we won't be able to access negative gearing unless it's a new build. So that's an interesting theme that we see throughout the budget update.
And that's positive in terms of tackling the housing affordability crisis by hopefully prompting more new builds across Australia.
Absolutely. I think it really does direct the supply piece of it. I think the jury's still out on the affordability piece.
Yeah.
What we're hearing, I suppose, off the back of the budget announcements is that there is expected to be an increase in rents, and also a marginal decrease in the price of property in Australia. So I think the affordability challenge and the delivery of the supply in the next 10 years is probably the biggest challenge to come.
James, let's talk about the employment space. Lots of BDO clients who are employers, big, small, and medium. What should they be focusing on in particular in the budget? And more particularly, what questions would they have when it springs to your mind?
Yeah, look, certainly the budget was quite understandably for a Labor government, quite focused on workers. So we see quite a few changes to the tax rules, which take away some of the incentives for investors and turn that into incentives for workers. Dr. Chalmers has given workers the WATO or the WATO, not quite sure of the acronyms around that. But it is an offset, $250 offset doesn't come in until the 1st of July 2027. So you're not going to see any money coming into your bank account until July 2028.
Yeah.
So it's a fair way off. But importantly, it is for workers. So if you are an investor and your income is just investment or passive income, you don't get this. So you need to be a worker to get that. So about 13 million workers around Australia will pick that up. So that's a positive. The other positive for workers comes in the form of the instant tax write-off, effectively $1,000 that you can write off without having to substantiate your claims. Um, Interestingly, you can still separately claim things like union dues or donations or things like that. So it's more around the sorts of expenses you would otherwise incur in work or earning your work or related salary type of income. And so effectively, it increases the tax-free threshold that's available for workers.
Yeah, that is one way of looking at it, right?
Yeah, absolutely. Another positive. And the third thing that was in the budget, which was only just mentioned, but it's not a new thing, is obviously the legislated tax increases that are available effectively because of a reduction in the tax rates at the lowest rate, which decreased from 16 to 15 and 14%.
Yeah.
$5 a week. It's not a huge amount, but it is workers being in the thought of government, which is a good thing. And for employers, to the extent that there is more net income that workers get, that's kind of a good thing for them. Not everything's great, but look, it's sort of working in their favor in that regard.
Well, thank you. I certainly understand that aspect of the budget a whole lot more now than I did 5 minutes ago, and I'm sure people out there do as well. So thank you, James. So Anders, putting your macroeconomic hat on, and it's a large one given the issues involved here. I'm not saying you've got a big head. I'm talking about the issues involved in framing the budget. Describe the economic environments against which this budget was framed and presented by Jim Chalmers.
Uh, I'd call it a difficult one. We thought it was difficult towards the end of last year when, at the time, we had persistent inflation. We had, as Ellie mentioned, we had the housing shortage, which had been emerging over a long time. We've had sluggish productivity growth in Australia. And geopolitics at the time was a story of tariffs and trade, which was troubling enough. But this year, of course, we had the energy crisis. So geopolitics has become more about conflict, availability of oil and other things. And that has added to the inflation problem that was already there. Um, we had the fuel price spike at the start of the year that caused inflation directly. Now economists are expecting further broader inflation to come through in the next few months, which is troubling as well. And then we had all levels of government providing support to households, which is good for those households receiving them, but also adds to inflation. So that's a pretty challenging time to hand down a budget. And I do think that has likely shaped some of the decisions in the budget. There's certainly more spending in this budget on things like fuel stockpiles that, of course, we wouldn't have even been talking about if not for what's going on in Iran. And that's probably squeezed out some of the more the more substantial reforms that might have helped improve productivity.
And also for a lot of the BDO clients out there looking forward to the next financial year and beyond, a fairly subdued economic outlook in Australia, and that's factored in the growth forecasts and the likes. In terms of economic activity, things are going to, for want of a better description, muddle on for a time. Is that a fair way of describing it?
I'm not expecting any major kind of turnaround out of this budget. So the government has forecast productivity growth of or assumed productivity growth of 1.2%. They usually assume about 1.5%. So perhaps some of these policies will have helped with productivity, but it's certainly not going to help the economy turn a corner.
Mm.
Um, the budget also assumes a pretty optimistic growth path for Australia's economy, more optimistic than the RBA's forecast, which they published earlier this month, and that's a bit of a risk factor as well. I think to the budget bottom line. If that optimistic growth path isn't realised, then perhaps revenues won't be quite as good as the government is expecting.
Let's stay with the productivity theme, Ellie. The federal government, state governments, local governments would all like the housing sector to be more productive, right? What are the key bottlenecks and challenges preventing the housing sector from being more productive and resulting in those extra homes the government is hoping for?
Absolutely, a great question. I think this is the key question for the construction sector at the moment. We recently did some interviews, and we're publishing something next week around productivity in the construction sector specifically. And one of the key things that we heard from that survey was that construction companies, over 50% of those that we interviewed, were saying that regulation was a key barrier to productivity in housing supply, particularly. I think when we're reading the federal budget updates, and as alluded to it before, there wasn't heaps that came out of it. There's definitely the regulations addressing some of the change around red tape that's being removed, and the administrative burden on companies to get productivity moving along. But I think it really comes down to businesses now and how they're driving the change in productivity in the construction sector. And that's a huge ask, I think. When we're looking at the dispersed nature of the construction industry, you think about your head contractors at the top, and they're doing all that they can in terms of AI implementation and productivity efficiencies, and everything that they can, but it's somewhat diluted, I suppose, from their supply chain base and the subcontractors that probably don't have the resources to be able to make those same changes. So there's a bit of an imbalance there. But nonetheless, I think the federal budget highlighted some good changes that need to happen. We're going to see faster approvals and things like that hopefully come through the chain to help supply. But nonetheless, I think it's still a long way off to get that supply chain happening and really delivering on the housing solutions.
That's a really good point on productivity, Ellie, because we always this time of year we look at the budget and see how the government is going to fix productivity for us, but really anyone in the policy space on productivity will tell you it's about a lot of small changes that's what the government can do, can try to get out of the way and tweak some things, but it's business that's got to do the heavy lifting, really.
Let's talk about the broader tax implications of this budget. Capital gains tax discounts, the 50% discount is gone in favour of the inflation adjusted uh, way of dealing with capital gains tax, and also a minimum 30% tax rate to ensure that, I guess, floor is there. It also importantly applies not just to housing, Shani, but all asset classes. And there's been a lot of discussion about that in terms of what that means for certainly BDO clients, but the economy more generally.
Yeah, so it is open to all, it is applying to all asset classes apart from the new housing. But as I did say, there's hopefully going to be some changes for that innovation sector and the tech companies, because I do think that that is part of the future goal for the government with a lot of their announcements, is making sure we keep them in Australia. So I think that the change is going to see, like I said, the push is going to go more into those annuity type investments in future, not the capital growth ones. So hopefully we do see the increase in the housing market that we're expecting to see. Yeah.
Could it encourage, and I'll get you to buy in as well on this, James, a shift, an investment shift away from housing to other asset classes?
I think that it could see a shift because there were other incentives that came in. So we've seen the venture capital tax incentives have changed as well. So we could see a shift in how people are investing in the future. Hopefully, with those venture capital changes, that means that funds can hold their investment a little bit longer, There's some startup concessions, which are extremely positive as well.
James?
And that's, I guess, one of the challenges coming out of the changes to the capital gains tax rules, because one of the great incentives that is available to startups when they've not got a lot of cash, but they still want to remunerate and attract talent to their businesses, is a startup share plan. And that relies on the capital gains tax discount. That's the whole point of saying, well, I won't take a salary at a higher tax rate. I'll take a risk. I'll work with you for an extended period of time. And my pot of gold at the end of that is some shares that are worth a lot of money that I only have to pay 23.5% tax on. That's a real incentive. And if that goes, that's a real challenge for startup businesses. So I am pleased to hear that the government is saying that they're going to have a look at a range of issues around venture capital, around startup, because that's potentially a real disincentive for staff to be involved in those sorts of businesses.
We're already here. Sorry, Shani.
I was just going to say it is also one of the, so as I said before, we've got the refundable loss as well. And so the cap on that is subject to pay-as-you-go withholding and FBT. But if they're a startup, a lot of the time they use these ESOP plans. So they don't have a lot of pay-as-you-go withholding and FBT. So are we going to see the benefit we want to see with that incentive?
But there's already discussion, worst case scenario, if after the consultation nothing changes regarding startups, of bright young things with great ideas going to Singapore or the United States, and the clearly detrimental effect on Australia's economic outlook if that was to happen.
Oh, look, that's absolutely right. I mean, it's very easy for the most talented people in this country to get on a plane and head overseas. And so we need to be doing more to encourage them to stay here in Australia, to develop our own industries. That will drive a lot of, economic gain within the country. So it's really important that we do focus on that.
Shani, you mentioned the nightmare of the trust announcement and legislative response, and please, if the other panelists have a view on this as well, because there are 840,000 discretionary trusts out there. It's important to note farming income and inheritance income will be exempted, but it's a lot of people, companies, and individuals with trusts that are going to be affected by this. I'll start with you, then anybody else wants to buy in. Um, how complex will the task be for clients, for people with trust generally, to try to navigate their way through this transition process?
I think it's going to be extremely complex because it's not going to be a simple rollover into another structure. You'll need to take into account things like you've got your state taxes, you've got stamp duty. There hasn't been any any announcements from those state governments so far that are actually aligned to this particular measure of the relief concession. So there's a lot to consider, the commercial aspects, but you also need to see the legislation. You wouldn't want to start moving anything or redesigning your family group until you've seen what these rules actually look like once they're in play.
Mm.
Yeah.
Any other views on that in terms of impact on the way small employers might have trust set up?
Yeah, look, I think we'll see a little bit of that, particularly in the small business space,
Yeah.
where those sorts of structures may have been set up, and as spouses, who may or may not be both involved in the business, but that's a really common structure that we would see in small business space, and so it's going to have a real impact for those particular individuals as well. And I agree, I wouldn't be jumping at making a change anytime soon. There's a lot that needs to happen, both from the legislation as well as guidance from the ATO, before we come up with what's the next best structure to have in place. But certainly the government's trying to push everyone into corporate structures, more transparency, less ability to make discretionary decisions to pay amounts to different people. So I can understand the attraction from the government for this sort of policy.
In your view, is that a good thing, policy-wise?
Oh, look, certainly from, if I kind of put my worker hat back on, they don't get the same opportunities. If you're a salary and wage worker, you don't have these same opportunities. So it is leveling the playing field between those people who are actually involved in delivering the work as those, who are involved in perhaps more entrepreneurial activities. So you need to get the incentives right across both groups of people.
Trust, capital gains tax, negative gearing, they're the big tax changes we're talking about. Ellie, in terms of the impact on the housing market, the government's forecasting rents to increase by, I think it's $2 a week. Is that, as the economists say, an heroic assumption, given the potential impact of investors passing on their higher costs to their tenants?
Yeah, I think that's what we're hearing definitely. The short-term view is that there will be a bit of a shake-up in the rental market. And I think what concerns me with this, I suppose, is we talk about a generational budget, addressing generational concerns, and there's a lot of the younger generations who are in this rental market who are going to be significantly impacted in the short term, and feeling most of the pain. But I think there's also some positives there as well, around, the build to rent focus that we have in Australia as well. We've recently done some research on this before the budget came out that said that the pipeline was going to increase by 30% of delivery when build to rent. So that's exciting, and that's without what we're seeing with the federal budget announcements, which focuses on new builds and also provides some really good exemptions for build to rent projects going forward. So I'm quite interested to see how that interplays, and also, I suppose, just standing back a little bit from the budget announcements, there's some really interesting interplays between the superannuation performance tests that we're seeing there as well, which could drive some really interesting change in how we're driving investment in property in Australia towards more build to rent and probably more social affordable social infrastructure funds and things like that. So that
A very important point as well on the social housing front. And is looking at the housing impact. We're already seeing some real world impacts on what the Treasurer announced. Commonwealth Bank shares were hit very heavily. Obviously, the CBA and every other bank heavily invested in the housing market. How do you see the housing impact playing out on the macroeconomic level?
Um, yeah, the impact on bank shares was really interesting to see because it I think that shows that the intention of the policy in terms of the effect on the housing market is likely working, or the market thinks that it's working, that it's going to take some heat out of the investor demand in the housing market. I think the jury's out on the effect on house prices. That is. Uh, there's there's lots of different views in terms of how much these policies might take off of house
I
prices.
think if a Treasurer argues it'll reduce the growth of house prices to 2%, that's a
Yeah.
very
So
core.
yeah, and that's the language that's being used. It'll reduce the growth. So no one's expecting house prices to go back
Yeah,
down again.
very careful with these language that
Yes,
uses.
that's right. And if you've been, if your property has doubled in value over the past over the past 10 years or so, you're probably not so worried about a small reduction in growth in the year ahead. So that's good for property owners, not good for housing affordability.
Mm. Shani, do you have a view on that?
Yeah. Yes, I do. I was just with the housing affordability side. Um, the I think that sorry, I've lost my train of thought now. Yeah, I just had a comment on the housing affordability side and around that younger generation. So they have introduced the grandfathering for the negative gearing in the CGT, which I think is quite good because I know a lot of the younger generation have done the buy a property,
Yep.
and rent it out until they can afford to live in it. So they don't have that worry of having to now have a cash flow issue because a lot of the mortgages are higher than the rents coming in. But it does also take that off the table for the future generation who are looking to go into the market. Because as Andy said, the housing prices, they're not going to go down. If they do, it's not going to be substantial.
No, no, at the very least. What do we think, and I'll toss this out to anybody who wants to literally pick up the microphone and run with this, about the general thrust of the budget, and that's shifting the tax perks away from asset-derived investment income and making the tax system a bit fairer, as the government would argue, and giving more concessions to income earned from labour. As a tax approach, is that James, we'll start with you. A reasonable thing for the government to do?
Oh, look, I certainly think it's definitely something we'd expect from a Labor government.
Yeah.
And I think just broadly from any government, I think it's a positive step to take. But there are still challenges. We still have bracket creep, and that's going to deliver the Treasurer, $77 billion over the next 10 years, which then potentially they can turn around and offer as tax cuts. And so hoping that voters will be wooed by that. But there are structural changes that could be made to take that away that would help
Yep.
individuals. And so, there are steps that are still open to government that they're not picking up. So it's kind of going part of the way there.
Room in the piggy bank for a potential tax cut spree by the government next budget, which is, of course, politically closer to the election.
Oh, look, that's right. And even the way that the WATO is set up, that it's something that's easy for the government to pull a lever on and increase the amount in a particular year or wind it back. It's from the way that the legislation could be set up, it's really easy infrastructure for the government to use going forward. So there are things that are being put in place, some structural changes that might help down the track, but it's still beholden to the government is making those decisions.
Yeah, Anders?
Yeah, I think are we calling it the WATO or the WATO? It's jury's still the WISO. Audit here. The WATO I find really fascinating because the talk coming to the budget was we need to collect more tax revenue from wealth and less from income to incentivize people who are working. And the WATO is a really interesting mechanism to do that. It's like they've set the lever up, but they haven't really pushed that lever yet.
Yeah.
And threatening to push that lever in future, the day after the budget, was a really interesting move from the government as well.
Yeah, yeah. And look, I think it certainly plays out because if you think about where we will be in 2028 in that election that comes around, who are going to be the biggest voter block in that section? Yes, your generation.
And boomers and Gen X, right?
Absolutely right. So this is where the government is playing to now. It's turning and saying we're pivoting, we're looking after you, but there is still a lot more that can be done in that space.
And I do think that I mentioned earlier some things probably were not done because of the energy crisis and how that's constrained what the government is able to do in this budget. And my guess would be perhaps that WATO lever would have been pushed a little further if we had a little more cash up our sleeves as a government to go further down that path.
A few other topics I want to touch on before the discussion ends. Ellie, putting your audit hat back on. Are there any minefields or things that BDO clients on the audit and compliance front need to look out for from this budget?
Yes, there was a sneaky one in there for those of you who might have missed it. It after reading through it, yep.
This is why we have smart people like you to inform.
Yeah, no, it snuck in there. Yeah, I think there was a change, and I suppose it needs to go through law and things like that. So it's very much up in the air. It's just a comment at this stage and watch this space. But the asset reporting thresholds are looking to increase and doubling in size. And
Oh, very sneaky.
I know, and I think I agree. It's going to really reduce that burden on companies, and that extra piece of audit requirements, etc. as well. But the really interesting one, I think, is around the sustainability angle on that, because as of just recently, we've started reporting on sustainability in Australia, and it's mandated. So we've had our first audit sign-offs happening just this December gone. So that's phasing in over 3 years, and it will capture that last phase. Will capture a lot of these businesses that are thinking that they're going to be doing sustainability reporting going forward. But I think watch this space. You could get a bit of relief there. But very much, I think our view at the moment is nothing's changed. Continue on it as planned, and have everything ready to go just in case it doesn't.
Keep an eye on Ellie's commentary in the weeks and months ahead on BDO. Research and development, more than a few companies and individuals watching this are involved in that space. I think you touched on this earlier, Shani, but some fairly significant changes, and not in a good way in terms of access to R&D incentives in this budget.
Yeah, so we've seen the threshold go from 20 million to 50 million with a refund, which is great, but then it's capped at 10-year-old companies. So in the R&D space, you've got biomeds and tech companies who can take 10 years plus to get to the point of actually turning a profit. So I think we're going to see some real shifts in how much is being spent on R&D in Australia. You could potentially see some moves to more attractive R&D jurisdictions. So New Zealand has a completely refundable R&D incentive program with no such caps on it. So I do think that there are some pros and cons into what has come out. And hopefully there's a little bit of consultation with the R&D market out there before it gets enacted.
So government spending, and as I'll toss this to you, obviously has a big impact on inflation. The RBA is cleverly, or very clearly and cleverly, watching this budget in terms of what impact fiscal policy will have on monetary policy. Everybody's hoping further interest rates, certainly the government is, put off for at least the time being. Was there enough action on government spending in terms of reducing it in the budgets to ease those interest rate fears out there?
No, I don't think there was. But I don't think the government has made the situation worse either. If particularly on the NDIS spending, for example, the targets there are quite ambitious, and if that is achieved, that will be a good thing for the I think for inflation and interest rates, particularly because this kind of spending, like the NDIS, where consumers are making decisions to consume things, but
Yes.
they're not necessarily using their own money to pay for it. That sort of money flows very freely into the economy and can cause a lot of inflation. So yeah, my read is it's not going to make the situation worse, but it will be very interesting to see to hear what the next comments from the RBA in that respect as well.
We'll all be watching to see what Michelle Bullock has to say after the next RBA board meeting. Another element, James, that affects workers and employees is the electric vehicle incentive changes.
Look, that's right. I mean, when this was brought in a few years ago, it was touted as a wonderful way that we were going to get a huge uptake in electric vehicles in Australia. And it's true. It's been fantastic, but it's been way better than what the government ever intended.
It's a good problem to have, though, right? But in budgetary terms, it's a big
It is
problem.
a really costly way to bring down carbon emissions. And that's what the external reports have told government. And so what is now going to happen going forward is, thankfully, for anyone who's got an electric vehicle, don't worry, you can still salary package it and you still won't have fringe benefits tax. So good for employees, good for employers. But that's going to go away. And it'll be phased. Eventually, we'll end up with, rather than 100% discount, it'll be a 25% discount from the 1st of April 2029. And during the period up until that point, it'll be phased in so that more expensive cars are starting to be phased out. So, look, it's costs the government a lot of money to provide this support, and we have seen a really big uptick in electric vehicles. So, ticks there, but it's going to be wound back, and hopefully there are other incentives that the government will offer more broadly to still see the take up of those sorts of vehicles.
So when it comes to electric vehicles, we could see some charge discussions in workplaces.
Like going. Thank you very much, Michael.
Our time is about out, so I want to finish by asking you all to give a summary of the thing that leaps out to you most, what you think BDO clients need to focus on, general takeaway, headline takeaway from the budget. I'll start with you, Shani, then go down the line.
Okay, so my key takeaway for BDO clients watching at the moment would be, I'm going to sound like a broken record, but it is around the discretionary trust restructuring. Just don't rush into anything. Make sure you seek advice, especially around the additional measures, the additional taxes you need to consider, such as stamp duty in whatever jurisdiction you're in, and the commercial consideration. So, and wait for some legislation to come out or guidance from the ATO.
Anders.
I mentioned the NDIS, and I think those savings there are really important, but there's a human side to that, which is very important as well. So my takeaway, my ask is, when you come across people in your lives who are affected by having some of those supports removed, be understanding and be supportive, because they're real costs to those people.
I'm glad you raised it. It's a very important point. Thank you. Ellie.
I think my key takeaway from the federal budget process this year is just being that focus on housing supply, and I'm really excited to see what comes about with that, particularly in some of those asset classes that we have previously been a little bit less, um, I suppose, favoured. So I'm quite excited to see how the landscape changes with property going forward as a result of today.
Thanks, Ellie. And James.
Thanks, Michael. Look, so for employees out there, the government's invited you out to dinner. They're trying to woo you with a lot of tax offsets, with tax cuts, but really don't get too starry-eyed, because at the end of the day, it's still the individuals that are bearing the lion's share of tax in this country. So you're going to end up paying for it at some point.
There's no such thing as a free lunch or no such thing as a free dinner.
Absolutely right.
Fantastic. Well, thank you to everyone who joined us on this fabulous webinar. My thanks as well to our fantastic and very smart panel as well. I feel like the least smart person sitting on the stage here, for sharing their insights and helping you unpack what this year's budget means in practical terms for Australian businesses and households. We hope that you found today's conversation very useful, and for a full analysis of the federal budget, please visit the BDO website and you have any questions about what the budget means for your business, please do not hesitate to reach out to the BDO team. Thank you again for your time. Thank you, panel, and have a fantastic day.